All right, so I don't think it's surprising. I don't think it's surprising at all. We saw the Cowboys play on the kickoff game. The Eagles are the Super Bowl champs. They were locked in because they won the Super Bowl. Talk to me about the fact that valuations are rising and the fact that, according to your research, 72 of the top 100 TV shows last season were the NFL games.
Well, that's a big part of the reason why the values keep going up, Frank. The revenue streams are very predictable, which is part of the reason why private equity money, as well as private deals like the Koch family that you just mentioned, want to get into the sport. They like the steadiness. They like the fact that you have the massive media deals. $12 billion in national media revenue is part of the $22 billion NFL revenue pie. And when you have a hard salary cap, this cost containment, steady revenue streams, experts say that you can forecast what the EBITDA is for NFL teams 5-6 years out. It's that stability that attracts that private equity and private market money.
So let me ask you, though, the stability in revenue is coming from the TV contracts. Have we possibly hit peak valuations on sports teams? Because in the NBA, I'm mixing up NBA and NFL, but in the NBA, we're starting to see owners actually try to sell out. We saw the Buss family sell out of the Lakers. We're seeing some other owners kind of taking a step back. Are we possibly at peak sports value, at least when it comes to private equity?
Frank, it's so funny you say that because we as sports economists have been talking about this for 20 years. We keep thinking we hit the peak, and yet again, especially with sports, because of the visibility of sports, and corporate America knows that that's the best way to reach their customers. So the values keep going up as long as these media companies are maybe at the regional media deals. We know that cable subscribers are falling because we see more streamers. Streaming revenue is going to increase, but the cable subscribers have fallen. But again, if the national media companies keep bidding for these national rights fees, that helps to keep driving. Now, the other driver, Frank, that is still an area of growth is these mixed-use real estate development deals. It seems that every franchise now, if they can, want to build an additional mixed-use real estate development here in St. Louis. We have Ballpark Village, many other venues. They want to add this because then they can generate revenue year-round. And as long as you've got that, that's another revenue stream that can add to franchise value.
You know, it's so funny you mentioned that. We had David Edelman, one of the co-owners of the Philadelphia 76ers. They tried to do that. They ended up going back to the sports complex. You also have Steve Ballmer out in L.A., really transforming that whole area around the Clippers Stadium. So is that the next level of growth that could possibly increase these valuations? The idea that not only do you own the team, but you own the stadium, and you also own some commercial properties connected to it all?
Absolutely. Ownership of professional sports these days is about not only the franchise, but it is a real estate play, and building up the real estate around your franchise and around your main asset, the venue, is just another way to add that revenue stream year round. And we see these multi-use facilities. That's another interesting dynamic here, is that the sports architecture business for the last 10 or 20 years, they see no end to their opportunities because all these venues want to have a mixed-use development so that they can go ahead and use their facility, not just for the main sport, but use it for so many other things, whether it's business meetings, weddings, all these other things that can bring in revenue throughout the year and not just during the season.